Okay, next up we are speaking about a section in your textbook that's summarized as external and internal reporting. So just a brief step back to where we ended off. So we spoke about the users, so the different people, stakeholders that are interested in your financial information, as well as the reasons why they might be interested. Okay, so next up we move over towards how do we report financial information. Now, this is a section that from experience students have struggled to understand because we don't really delve into this a lot deeper than just introducing these things to you that you see in front of the slide. If you are going over maybe doing a second year accounting module, you would deal with these characteristics and elements in a bit more detail. But I'm going to try and still give you some context so that if you read things like qualitative characteristics and you see things like IFRS, then you do understand the place that it has in your textbook. Okay, so we spoke about the users of financial information. In the very first slide, I mentioned that we do accounting in a very specific way. It's not just every lecturer teaching, random numbers on a board, thinking about a system right there in the classroom. We've got a very, very uniform approach that we follow. Okay, and well, in very basics, that approach is guided or given to us by IFRS, which I mentioned earlier is the International Financial Reporting Standards. So every country decides to what I want to say governing body in terms of accounting they want to belong to. In South Africa, we belong to the International Financial Reporting Standards, or we follow the International Financial Reporting Standards. So we follow their guidelines in terms of drafting financial information. So all businesses follow IFRS. So that's also why when we teach accounting at university level, we also teach you, I want to say teach you the IFRS way of looking at financial information and unpacking and understanding financial transactions and accounting transactions. So the way in which we bookkeep or then record financial information is very much based on a system, like I said, governed by IFRS. You can read more about that on page 8 and page 9. I think it goes into a bit more depth than you really need. But again, if we test you on some of the theory of this learning unit, it is important that you understand the basic building blocks of why we do things the way we do when you come to the more practical learning units. Okay, so over and above IFRS being a very important role player, like I said, in the accounting field, we also then have certain characteristics that we would follow in a business, and they are called the qualitative characteristics. So it's called qualitative characteristics because it's not based on numbers. I want to say, we all know 1 + 1 = 2 and things like that, and we work with rand figures obviously all the time in accounting. So your calculator is like the most important thing that you'll have. But over and above numbers, we also have certain qualitative characteristics that are very important when we do accounting, and it's things that we have to uphold. It's also something that's governed and regulated by IFRS. You can read more about them on page 9 and 10. But what I have done for you on the slide is just summarize them. They are broken up into two. You get your fundamental characteristics and you get your enhancing characteristics. Now, on a practical level, we would expect of a first year doing accounting for the first time to just basically tell us what are the characteristics and maybe what do they mean. But if you can appreciate that in reality, these characteristics are used in business, and maybe one day if you end up working in the financial field, your financial results and your numbers and your financial statements need to meet all these characteristics. So they're almost like a bit of a backbone and a bit of a quality control check that at a first year level, you don't practically implement this. You're not going to ask yourself, is this number relevant? Is it faithfully represented? Is it timely? But the way in which we teach you accounting already now, the numbers that you will be working with and the transactions that you will be working with will be timely, will be faithfully represented. Okay, but obviously in reality and business, these characteristics form an incredibly important part of the numbers and the financial results that we need to present. Okay, so I'm quickly going to delve into them just to unpack all of these like six terms that you see on the slide in dark blue and light blue. So your fundamental characteristics first. So your two most important characteristics that your financial information needs to have is relevance and faithful representation. Now, in plain simple English, Relevance is kind of exactly what the word suggests. So the transaction, we're speaking about transactions now. So the transaction that you see in front of you needs to be relevant. So it needs to be relevant to the business. It needs to have happened maybe in the time period that you are doing financial information for. So that's kind of the first text box. And it sounds as obvious as it is, guys. I know it's quite a, you may be thinking that it should be something bigger and something huger, but it is actually just as simple. So our transactions, A, they need to be relevant. Secondly, they need to be faithfully represented, which means that they need to be accurate. You need to be able to make an estimation and saying if you are doing a purchase for a vehicle, do you have an invoice price? Do you have a proper interest rate if you're taking out a loan? So things like that. Do you have the accurate RAND information almost to be able to say this is the value of something? Okay. So if you are maybe buying something, you need to be able to, like I just mentioned, know how much it's ultimately going to cost you. Okay, but you can read more on those fundamental characteristics in your textbook. Okay, then secondly, you've got your enhancing characteristics. So they are verifiability, timeliness, understandability, and comparability. So verifiability, I would summarize is that a transaction that you see, you'd be able to verify in a very, very basic way of looking at it. I would say that's something where your source documents become quite important. Can you verify this transaction? Would someone else unpack the transaction the same way as you would? So something to do with that. Timeliness, it needs to happen in the specific time period that you are working in. It doesn't help you having a transaction from 2015 if you are working in the 2021 financial year. Same as it doesn't help you having transactions for the future, but you're actually in the 2021 financial year. Okay, so great. If someone tells you they're going to pay you 2 million Rand in 2 years' time, that's fantastic. It's not really timely because you are always working in a specific year. Okay. And obviously you don't know if it's really going to happen. And it doesn't impact our results in this specific year. And then understandability and comparability, that those two are always for me why we follow IFRS and why I say to you on the very first slide, accounting is done in a very uniform way. So understandability, if we always adopt the same methods and the same approach, we always classify things the same way, there's a level of understandability there. So we can go to different financial years. We just call the years that we work in financial years. So whether it's 2019, 2020, or 2021, we would be able to see, you know what, I classified a vehicle in a specific way in 2019. I would classify it the same way the year after and the year after. Not only in your same business, but also in other businesses in the same sector. You have a level of, I want to say, conformity or uniformity, which increases the understandability of your financial information as well as the comparability, because now you can go and actually understand two businesses' results because they use the same method of getting their financial results. You can actually go and compare it a bit easily. And also because you've now done accounting 1 at university in a specific way, those businesses use these same building blocks that we're teaching you to do their financial results. So with a bit of luck and a bit of studying, you'd be able to go out after your first year, go look at a set of financial statements. The one I uploaded to you is Woolworths, and be able to see, okay, I actually do understand what's going on here. Okay, because there's a level of uniformity, there's obviously a level of understandability. Obviously with some technical knowledge, I mean, we don't expect anyone walking on the street to be able to unpack financial results of a business, but with some level of understanding of the area that you work in, you should be able to understand financial results of a business. Okay, so those are your, I want to say, 6 qualitative characteristics of financial information. And like I said, we always really uphold them. And on your level in first year, you don't need to ask the question, is this timely, is this relevant? In reality, in the real world, you would use these characteristics to assess whether you're going to consider a transaction or how you might be able to record something. But it is important for you to realize there are certain characteristics and elements, and I want to say tick boxes, that run in the background of doing financial transactions and recording of financial transactions. Okay, and then next up in your textbook, just briefly touching on the different fields that we get in accounting. Okay, so again, taking you back to the first slide, I spoke about accounting and the way we write things down. It's to enable us to understand the financial results, to enable us to make some decisions, to make some projections. So in that, we then split accounting. It's just for you for knowledge purpose, also quite introductory, so that you know if we say accounting, typically there are two fields. Okay, you can read about that on page 12 to 13. Made a note there. The table on page 13 historically has been quite important for you to know and to learn. And I mean, the majority of you will end up doing financial management as a module. And that's kind of, for me, always where the other part of accounting comes in. So in first year, we pretty much teach you financial accounting. So the block on the left, we teach you how to record financial information. We teach you how to understand financial information, how to look at transactions, how to ultimately produce results. Okay, ultimately produce financial information that's useful to someone. That we use in what they call management accounting, and you'll touch a bit on that in financial management. So we take the results and we say, okay, now what does this mean? Okay, so the one is very much historic, and you'll see that in the table on page 13. Financial accounting is very much recording transaction that has happened. We look at them, we say, okay, so what happened? How do we record this? What is our profit for the year? Or how much sales do we have? Or how many assets do we own? What is the value of buildings? So it is very much historic, the year that's just gone by. What does that produce for us? Okay, and if you're sitting there on a specific point where you have these results, you have these financial informations on hand, maybe you give them over to your management accountant and he would say, okay, great. So this is the profit for the year. What did that look like last year? What do we expect to make in a year from now? How does this compare to other businesses in the same sector? So that's why if you look at the little picture in the green that says management accounting, they very much give you a little graph with an arrow. So a bit about future projections. So what decisions do we make based off of the financial results that we have? Okay, and typically also the ones very much internal for internal use. So typically planning ahead, making certain decisions based off of your financial information, and the ones very much for external parties, our stakeholders I mentioned earlier. So we present and say, listen, whoever's interested, this is what my business made in the past year. Okay, and that's your financial accounting.